Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, then go look someplace else. But if you're ready to start trading like a professional, then stick around. So today we ran 6 baskets, all in the energy sector, the various industry groups from the energy sector. We have run these things before, and we've had the most luck with the upstream group here. That basket has produced 3 trades for us in the past 2 months, and all 3 of those are closed with a very nice profit. In fact, one of those is our most profitable trade of the past 2 months. And that's the basket I think we're going to end up with again today. Now, I ran it with a set of filters, but then I went ahead and added some more filters because we had quite a lot of things to look at. And with the filters as they are, these are the 6 that we came up with. And the one I want to look at is here. Now, it is kind of an interesting one. It has 8 times returning to the mean profitably. So the quick and dirty back test is great. But notice that the correlation is barely passable because we have this set for 0.8. And quite frankly, the RW coefficient is also barely passable. So, I say passable. Well, passable is the operative word here, right? Because it does fall within our criteria. But both of those numbers just barely. The number that's great here in this case is the number of winners. Let's take a look at it in more detail. So the picture is really, really nice. So something, what does this go back? 2 years ago, a little over 2 years ago, forward, that picture is exactly what we like to see. Now, one thing is that it is currently right out here, which is not outside the second standard deviation. It's barely outside the first standard deviation. But if we drew a resistance line on this chart, it would end up being about right in that spot, right? So, I don't know, you might want to watch it. Obviously, it's been out quite a bit higher than this a couple of times, but it has begun a little return to the mean, and the expectation value, I think, looks pretty good. So let's go take a look at it. I guess we have to add it first to the observe page. So, as I said, an absolutely beautiful picture with the only thing, that's not what I would have wanted is the fact that it's not quite as far away from the mean as I would like. But that picture is so strong that I feel it's pretty safe. I mean, even if it moves out a little bit, it's got a very strong track record of returning to the mean profitably. So let's look at what the hitting probabilities have to say. So the mean reversion slope looks very nice here. Let's run the Monte Carlo simulation. Okay, so maybe here's the weakness in our plan. It says that we're going to be below, obviously it's a short, only 63% of the time. Now, if you were a normal trader, 63% is probably pretty good, but a mean reversion trader with pairs, that's not as good as we would want. And I guarantee that's a function of the fact that it is not so far away from the mean. So we might want to give this a second thought. Let's go back and take another look real quick at what else is available. So here is an interesting one also in the upstream basket. Correlation is much better than the other pair. The RW coefficient is okay, not great, but okay. The number of winners is 6. Let's look at it in the analysis page. I looked at this one earlier. This was actually my second choice. The only thing is you can see that starting, what is that, a year and a half ago, it had a very nice picture, very nice range, and then something happened. And since then, it's been a lot more active. Now, again, I don't mind active, right? That's more profit for us if we can capture this. But it looks like right now it's up close to the second standard deviation, not quite. I guess we can see if it turns out to have the same issue as the previous one. But let's go ahead and add this one to the observe page first. So this is a very nice picture, and it has been very, very active, right? Much bigger swings than it had been having previously. So, and it's still moving up away from the mean. So we might want to keep an eye on it. And perhaps if it moved up a little bit more, it would actually have a better expectation value. But let's go take a look at the hitting probabilities. Okay, a reasonable curve for the mean reversion. Let's run the Monte Carlo simulation. So the current price 3.87, and it's a short. So it's saying that we're going to be below that price 84% of the time. Well, that's better than 63% like the other one was. So that's a much better number. The target price, it says, is 0.09, and we would get there half the time in 29 bars, but the mode being 13. I think those are all quite acceptable numbers, and I like the fact that the return to the mean kind of numbers are stronger here than with that previous picture. So we'll keep an eye on that other one. If it moves up a little bit more, gets a little bit further away from the mean, I think that's still going to be a very good trade. But in the meantime, this one is going to be our recommendation today. Let's go take a look at it back in the detail page. It's VNOM minus EC using a ratio of 1.6. It has a good quick and dirty backtest, not perfect. There is one loser in there, and that was only a year and a half ago. But overall, the picture looks very interesting, and the profit potential looks good, and the return to the mean time looks good. So this is our recommendation, VNOM minus 1.6 of EC. It is a short, so for every share of VNOM that you sell, you're going to buy 1.6 shares of EC. Good luck with your trading.